In this video, I'm going to show you a super accurate buy and sell indicator on TradingView that you can use for perfect trade entries. We'll also combine this indicator with other technical analysis tools to create a super profitable trading strategy. If you find value in this video, remember to leave a like. Let's get into it. Now, the buy and sell indicator that we're talking about is called momentum-based zigzag. To add it to your chart, you're going to go to TradingView. Then load whatever forex pair or trading security that you like. For me, I'm going to be using the 1 hour time frame of AUD NZD. Then open the indicator search tab and type in momentum-based zigzag. Select this one by Peter_O. The momentum-based zigzag indicator helps traders identify changes in price trends. It does this by highlighting significant moves in the market and ignoring minor fluctuations in price by drawing zigzag lines on a chart. Now, typically, a traditional zigzag indicator confirms pivot points based on a set of predefined rules, usually involving a time factor, meaning a pivot point gets confirmed after a specific number of candles have passed. However, the momentum-based zigzag adopts a more responsive approach. It identifies market reversals as they occur without waiting for predetermined number of candles for confirmation. This allows traders to follow the market more closely and adapt to its movement in real time. This basically means that this indicator doesn't repaint. Now, to identify reversals quickly and accurately, this tool integrates with various momentum indicators like the MACD, the moving average, and the QQE. For this video, we're gonna stick with the QQE. And then we have options to modify the settings of any of these momentum indicators that you choose. For example, if you go with the MACD option, these are the settings to change the fast length, the slow length, etc. If you choose the moving average, these are the settings for your modifications. And for the QQE, here are the settings to change the RSI length, the QQE factor, the RSI smoothing, and the threshold. For this video, we're gonna stick with the default values. Now, to trade using this indicator is really simple. Whenever a long signal is printed on the chart, we enter a long trade. And whenever a short signal is printed on the chart, we enter a short trade. However, as you can see here, this indicator isn't the best when the market starts ranging. To filter out the majority of these false signals produced, we're gonna need a trend confirmation indicator. On the indicator search tab, type in purple cloud, select this one by Murad M82. Double-click on it to access the settings panel, then on the inputs tab, change the period to 25 and disable the MMD band. Then on the style tab, change color 0 of the bar colors to green and change color 1 to red. And then disable all these options. After that, click OK. The purple cloud indicator operates by identifying trends through color coding the price candles. When it colors the price candles green, like here, that indicates a bullish trend, and we're only gonna be looking to take long trades. Conversely, when it colors the price candles red, that indicates a bearish trend, and we're only gonna be looking to take short trades. Now, this strategy is good for now, but in order to make it so much better, we're gonna need to add one more tool to the chart. But before we do that, let's talk about HenkoTrade. Now, you may be thinking, and what exactly is HenkoTrade? Well, HenkoTrade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly trade gold, and up here you can see that this is actually a live account. The reason why I love HenkoTrade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest they can go. For those of you who love high leverage, HenkoTrade offers a maximum leverage of 1 to 500. If all of that isn't enough, they're also going to give you a 100% bonus for all your deposits up to $25,000. So if you deposit, say, $500, they're gonna give you a bonus of $500, so now you'll have a total of $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to HenkoTrade using the link in the video description. Now, back to the video. Now, to add our final indicator to our chart, open the Indicator Search tab and type in ADX and DI. Be sure to select this one by Beikabu Oyaji. Double-click on it to access the settings panel. Then on the Style tab, we're gonna change the ADX color to yellow. Then change this level color to a lighter shade of gray. After that, click OK. Now, looking at this indicator, you can see that it's composed of 3 different lines traversing the indicator window alongside this horizontal line. This yellow line is called the ADX. This green line represents the DI+, and it's used to identify bullish trends whenever it goes above this red line. Speaking of the red line, it is known as the DI-, and it helps in identifying bearish trends whenever it goes above the green line. This horizontal level right here serves as the trend threshold. Now, the ADX and DI indicator is going to be used to identify short-term trends in the market. Whenever this green line is above the red line, that indicates a bullish trend. Conversely, whenever the red line is above the green line, that indicates a bearish trend. Now, what about this yellow line? What is its function? Well, this yellow line is used to indicate the strength of the trend. In a bullish trend, for example here, whenever the yellow line goes above the 20 level, that indicates that that bullish trend or bullish momentum is super strong, and you should definitely look to enter only long positions. But within that bullish trend, if the yellow line happens to go below the 20 level, that would indicate that the pre-existing bullish momentum is decreasing, and you should probably start exiting your long positions, if you had any. Now, on the other hand, in a bearish trend, for example here, whenever the yellow line goes above the 20 level, that indicates that the bearish trend is super strong and you should only be looking to enter short positions. But if the trend remains bearish and the yellow line goes below the 20 level, that indicates a decrease in the strength of that bearish trend and is an indication for you to start exiting your short positions, if you had any. Obviously, the way we're going to use this indicator in conjunction with our strategy is to identify market trends and to use the yellow line to ensure that the trend is strong enough before we enter any positions. How we're going to do that is really simple. To enter a long trade, these are the conditions. First, the momentum-based zigzag indicator should print a long signal to indicate a continuation of the pre-existing bullish momentum. Second, at the time the long signal is printed, the purple cloud indicator should color the price candles green to indicate that the market is in a long-term bullish trend. Third, we need to confirm that the market is in a short-term bullish trend. For that, we're going to pay attention to the ADX and DI indicator. We need this green line to be above the red line to indicate a short-term bullish trend. Last but not least, we want to confirm that this bullish trend is strong enough to push the price in the direction of our trade. For that, we're going to make sure that this yellow line is above the 20 level, and it should also be angled upwards like this. Keep in mind that all these conditions should be met by the time this long signal is printed. If any of these conditions isn't met by the time the long signal is printed, that setup becomes invalid. All our entry conditions are met on this candle, so we're going to enter a long trade on the open of the next candle. We're going to set our stop loss below the most recent swing low. And for the take profit, we're going to set it at 2 times the risk. We let this trade run. And take profit. Now, to enter a short trade, we're going to do the opposite of everything we did for a long position. So first, the momentum-based zigzag indicator should print a short signal to indicate a continuation of the pre-existing bearish momentum. Second, at the time the short signal is printed, the purple cloud indicator should color the price candles red to indicate that the market is in a long-term bearish trend. Third, we need to confirm that the market is in a short-term bearish trend. For that, we're going to pay attention to the ADX and DI indicator. We need this red line to be above the green line to indicate a short-term bearish trend. Last but not least, we want to confirm that this bearish trend is strong enough to push the price in the direction of our trade. For that, we want to make sure that this yellow line is above the 20 level, and it should also be angled upwards like this. Keep in mind that all these conditions should be met by the time this short signal is printed. If any of these conditions isn't met by the time the short signal is printed, that setup becomes invalid. All our entry conditions are met on this candle, so we're gonna enter a short trade on the open of the very next candle. We're gonna set our stop loss above the most recent swing high. For the take profit, we're gonna set it at 2 times the risk. Letting this trade run, and it hits take profit. As we can see, the momentum-based zigzag indicator offers a responsive and accurate approach to market analysis by utilizing momentum indicators to identify market reversals and significant price movements. It's particularly helpful for those wanting real-time and reliable insights without the delay or overcomplication seen with traditional zigzag indicators. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.